Welcome back to the Patient Magnet podcast. My name is Jared Rohr, the CEO and owner of Aesthetic Conversion, a web and SEO agency. And in the Patient Magnet podcast, we are talking to you about your digital sales funnel and how to manage your business properly. You've seen us talk about fascination, getting eyeballs on your business. You've seen us talk about acquisition, turning those eyeballs into a lead, conversion, converting those leads into an actual patient, and then engagement, re-engaging with them over and over and over for years to come. And I always say that you have to have 3 things to win as a business owner. You have to get an A+ in 3 classes. You got to get an A+ in marketing, which is getting eyeballs on your business, an A+ in sales, which is converting those eyeballs into a new client or patient, and you have to get an A+ in product delivery, which is managing your business and fulfilling on the promises that you just made in marketing and sales. And talking about that side today, we have an amazing accounting firm with us, the Liguori boys. I feel like I see you guys all over on Instagram. They're quick to comment, they're quick to engage, they're very in tune with the industry as a whole. You guys have definitely very much like endeared yourself. A lot of people are very big fans of you. I told a few people that I was interviewing you this week, and they're like, "Oh my gosh, that's so great!" So anyway, I've been a big fan of you guys since I met you at Accelerator, I think 2 years ago, and so very excited to be able to do this. So if you guys want, if you could just tell us a little bit about what Liguori offers and what you guys do, and then what we're going to be talking about today is specifically how to manage your finances as a clinic, maybe some of the pitfalls that people run into, and how we can get out of those pitfalls.
Sure. I'll kick it off, and thanks so much for having us today, Jared. We're excited to be here.
Yeah, of course.
Liguori Accounting, we provide outsourced accounting services to small businesses in the medical aesthetic space, and that includes bookkeeping services, monthly bookkeeping, tax services, so tax preparation, but also tax planning and tax projections, tax advisory, as well as fractional CFO support. So it's full outsourced accounting team service that we provide to our clients. And we've been working in the industry for a few years now. It's a great industry to be in, and we've really enjoyed the space. And my background, just quickly, I worked in public accounting. I came up, got my CPA, worked in private for a while at a public company, worked in financial reporting, and then went out on my own and started the CPA firm. So it's been a fun journey, but I think I've learned a lot from different experiences and different aspects of my career leading to this, starting this business. And it's been great. We're building a good team here and expanding. We're working with clients across the country right now. So yeah.
That is awesome. Dan, tell us a little bit about yourself as well.
Yeah, so Dan Samard, I joined Liguori Accounting in 2022, which is pretty wild, beginning of 2022.
Awesome.
So my background is business administration with a philosophy degree, actually. So I have 2 bachelors. So I like to say I have the business and the ethics portion of running. So I make sure that, I embody the core values that we have here at Liguori Accounting, integrity being one of them. So making sure that we build trusted partnerships, we build trust within great trust within our client base, obviously because we're managing the money piece of it and helping them with the money piece of it. So just sales, business development, I was brought on to help build the sales process out. That's translated into many different facets of running a small bit, helping to run a small business. So I help all the way through the first touch point through to reoccurring services. So I'll even assist with the onboarding. So I always tell people when they engage with us, I'll be the face you see for a little while, but don't worry, we'll introduce you to other members of our team.
Yeah, and it's awesome that you guys have all of it under one house as well. Like I was telling you prior to us recording that, I've got a fractional CFO, I've got a bookkeeper, I've got an accountant. Shout out to my mom. But they're all kind of in their own. Yeah, she's awesome. They're all kind of siloed in their own little spaces. So it's really cool that you guys kind of bring that all under the same roof, as well as tax consulting and all that stuff as well, which is huge.
Yeah, we've done that intentionally because there's a tremendous amount of value in that, and we do it strategically. So we are very we keep capacity really close to our chest. So we want to make we ensure we protect capacity of our staff, and to ensure that no quality suffers through the experience, from the first touch point through to reoccurring services. Um,
Now, why don't you guys tell me? Let's like kind of start at the beginning of this whole conversation. Why are finances so overwhelming for most clinic owners? Why would you say it's such an overwhelming topic? I feel like I don't know a single. I literally got an email today, and and this is gonna be really funny if this person is listening to this. I don't think he will. He sent me an email. It was a client that wanted to add more services because they're doing only a couple of things with us. They want to do everything we have to offer so they get the maximum amount of leads, and grow. And it came out of a little bit of a space of fear of like they've been as minimal as they can be, and this summer was a little rough for them. And so the client said, "Hey, can you send me a quote for adding everything you do?" And I said, "Yeah, no problem." And then he sent me a quote. He sent me an email back saying, "Well, what?" He said something. Let me see exactly what it said, because my response was chef's kiss. My response in my head, my response in my head was chef's kiss. I said something very, very democratic, but the client said, "Oh, can you please cut us a deal? We've been struggling." And my response that I wanted to say was, "Yeah, for sure. Only if I'm allowed to charge you more when I'm struggling." Which of
That's
course
good.
the client would be like, "Well, no." And it's like, "Well, then what are you doing to me? Like, this is your
Yeah.
problem, because if I said I'm struggling, I need to charge you more, what would they come back with? Well, that's your problem.
Right.
They
Oh,
would say the
man.
same
Yeah.
same exact thing. Now, I told the client, I said, unfortunately, our prices are the way they are, so we can give you the best price. I said something very nice, and
Yeah.
I was not. But in my head, I thought, great, then I get to charge more when I'm struggling. And it's like, oh, that doesn't work. You're right. So maybe if you guys could unveil that a little bit, why do you believe most clinic owners struggle with managing their finances?
Yeah, I think it's a common scenario that the owner of a clinic is a practitioner, right? That's their
Yeah.
background, that's their experience. They're very good at what they do. They are great with patients, but they may not have that financial background or expertise or experience just running a business previously. And when you're starting a business, obviously the financial aspect is a key component, making sure things are set up properly, making sure you have the right systems in place, making sure you're tracking your cash flow, your finances, your P&L each month. So I think that's there's a big learning curve there for one, if you're new to being a business owner or managing finances for a business. So that's definitely a big aspect. And then, secondly, just time. Even if you are able to do that and competent in a financial sense to run a business, do you have time to be both a practitioner, HR manager, providing services, like all the hats a business owner wears? So I think that's one of the biggest things that people run into is just not having the bandwidth to manage that aspect.
Yeah, 100%. Now, when it comes to tracking, what percentage of people are tracking anything at all when you guys start working with them?
uh, I would say it varies widely. I mean, sometimes we're working with people who have a bookkeeper and things have
Of
been up
course.
to date, which is obviously best case scenario. A lot of times, I think the most common, especially for newer or smaller med spas, is they're doing it themselves, or their spouse is doing it, or their, uncle does it on the side,
Their
whatever it
mom.
may be,
Yeah.
right? Their
Their
mom.
mom.
Yeah, exactly. Which is all well and good, but if they're not a professional or don't know the nuances of accounting, bookkeeping, like there's going to be issues there. Oftentimes we see it. I mean, I would say it's more than half where the books are not up to date or not reconciled up to date. So there's usually a gap in the accuracy of the financial statements. I'd say
Yeah.
that's the more common situation.
Majority of clinics you're working with, you guys are taking a look at their books, and it's like these things have not been updated in months. And what? Usually it's just a mad dash at the end of the year before taxes. If they do end up paying their taxes correctly, like a mad dash at the end of the year to like reconcile the books for the year.
Right, like oftentimes it'll be the CPA that's doing their taxes will just reconcile their books out and clean things up at the end of the year.
Oh my gosh.
um, which can work okay as far as like getting your taxes done and filed, but like more likely than not, there's going to be errors, things missed, and then on the other side, like you don't have any data to go off of throughout the year. Like you don't, what insights do you have to look at from your financial statements if you're taking that approach to to
Yes.
handling your accounting. So
Now, do you advise people file their taxes quarterly or annually?
yeah, I mean, we advise our clients to pay quarterly estimated taxes if they need
Yeah.
to. We evaluate that for them on a regular basis to make
Mhm.
sure they're set up for, a good position come filing their taxes in April or whenever it may be. So, it depends case by case, of course, but if you're a profitable spa, you're going to want to pay quarterly taxes.
Yeah, that's what I would figure. Now for obviously, I am an advocate for this as well. I'm an advocate that you fractional out bookkeeping. You should, in my opinion, you should not have an in-house accountant or bookkeeper. I think that being fractional is much stronger. Maybe if you have 10 clinics, maybe there could be a situation where you bring on a full-time internal
Yep.
financial person, but that full-time internal financial person will probably still be outsourcing certain things. Uh, but let's say it's a small business owner that just wants to figure out, okay, they should, in my opinion, I say this about marketing too, that they should know the baseline metrics for judgment. Like it shouldn't just be, oh, I tell so and so to do it, and I tell so and so to do it, and I never have to think about it, which can be good, but like for marketing, I want them to be able to audit my work and to know I'm doing a good job. So for that clinic owner, they're a small business owner. What's an easy way for them to kind of just start managing their books properly? A simple way for them to be like, hey, look, as long as you just do this each month, you're at least heading in the right direction.
Yeah, I would say the first step is making sure they're up to date. So we always recommend using QuickBooks or a similar system. We use QuickBooks for our clients. Make sure that's up to date and you have accurate numbers to be looking at. So that's step one. Step two is actually look at your financial reports at a minimum once a month. Like get in there, look at your P&L for the month, look at the year to date. My favorite report to look at is the profit and loss by month, so you can sort of spot the trends and see where there may be potential outlying issues. So I would say on a monthly basis, at least do that. And then obviously monitoring cash on a regular basis, at least weekly, to make sure you have cash flow to support payroll, inventory purchases, all those important factors. So
But at minimum, monitor your cash on a monthly basis, monitor your profit and loss statement that you can export out of QuickBooks on a monthly
yep,
basis, and just take a look at how it's been going month over month compared to the previous months, just so you have a good assessment of what your actual growth looks like at a minimum. So
at a
you're at
minimum.
least at it. Yeah,
Right.
I would argue that clinic owners should be looking at their money every day.
Sure.
I think at the end of every single day, they should be doing some sort of a daily close, some sort of okay, great, here's everything that just happened. And I don't know, this is a little more granular. I don't know if they would need to document everything in their books that day, but they should at least be looking at it every day so that they know here's exactly what happened every day of the week. But some people are just slammed. They can't. They're
Hmm.
slammed. They're slammed, and they're
Yeah.
they're trying to put on every single hat. Now,
Right. And
go ahead.
even if even if they're a little overwhelmed by all that, connect with a local professional. There's
Yeah.
bound to be a local bookkeeper who's willing to transfer some knowledge and educate a little bit on how to use QBO, how to
Hmm.
read a P&L, how to categorize certain expenses, right? Even the basics of that overwhelm people.
Yeah.
So don't be afraid to reach out to your local community.
Yeah.
If you're not ready to engage a larger professional firm that's maybe specialized in this space or whatever, there are certainly going to be people in your community that are going to be able to help you just get a baseline. And then that way you feel a little bit more confident if you're going to make that decision to get things organized yourself to just to start.
Yeah, I 100% agree. And I will say having somebody who is niched is a dramatic difference between having somebody who is non-niche. Somebody that knows your space, your industry, how things should be being billed and how it should look, dramatic difference. And I think one thing that you touched on earlier, when you were talking just now about people's time and about them not having time to do the books properly, we can go into this for a second at least, is I had a good friend of mine, Mary Robb. She owns a social practice. She's a dynamite lady, dynamite business girl, and business girl. I don't know if that's a real phrase. Mary, you're a business girl.
There you go.
um, uh, Mary told me this 2 years ago, and it has been. I have just latched onto this ever since. Is that as the owner of a business, your job is momentum in the business. Your job is to build speed in the business. And I was learning chess at the time when she told me this. And there's a principle in chess called winning tempo. And when you win tempo in a chess game, it means that you make a move that requires your opponent to move 2 moves to get away from it. Okay, which puts you one step ahead of your opponent. And so one of your goals in chess is to be winning tempo all the time, meaning that you're making moves that would otherwise cause other people to make 2 moves. And as a business owner, our job is momentum and speed and keeping our business rolling. And so we need to be making decisions that keep our speed going. Running our books is so important, but it is not a momentum driver. Running our books, doing our accounting is so important for winning. It is not a momentum driver. Knowing your numbers, I think, could help you drive that momentum, but really, like, it's managing sales, marketing, sales, and product delivery, and all the other stuff, I believe, should be fractioned out. Anyway, sorry, I know that was a whole soapbox that I just got on there, but whether it's farming it out to your marketing company, it's like you shouldn't be doing it yourself. Don't waste your time. Like, do the thing that makes you money and build speed for your business.
I love that. The momentum driving. That's really good.
Yeah, that's your job as a business owner. Your job is not to be the best at every job in your company. Your job is to do the best things in your company. Come on.
And then partner with
church.
people who help you. Yeah.
Yes.
Preach it.
But yeah, partner with people who help take you out of that. Yeah. I completely agree.
And your financials, I think, just to continue that trend here, are a tool to allow you to make decisions for that momentum.
Correct.
If you don't have that information, like, you're not going to make the best decisions to continue the momentum. So, yeah.
Yeah. For example, we're doing a big hiring push right now in our company. And I'm being very trepidatious with bringing on new clients during that phase so that I can balance out our deliverability during that time. So it's me making sure, like, okay, I don't want to oversell so that we can't deliver on our promises to our clients. So it's like, it's hard for me because sales and marketing build the business, but having solid systems with our team, keep the business alive. And so there's this constant, ebb and flow that I face that I know a lot of clinics face as well. Do you have any, I'd be curious to know if you have any, like, obviously you can call them ABC Med Spa or something like that. But do you have any, like, interesting case studies of, oh my gosh, this person had no idea what to do with their finances, and then this happened months later or years later? Here's where they are a year from now. Is there any case studies specifically that come to mind of people who were clueless when they started working with you and now are obviously enjoying the fruits of not having to manage their finances themselves?
Yeah, I think I'll touch upon sort of one situation which isn't necessarily unique, but we see it a lot. Is med spa comes to us, they think things are going okay, they're managing, however they're managing their books, it's getting done good enough. We do a deeper dive and sort of run a little analysis, compare them to industry benchmarks, and can find some areas where they can make improvements. A big common one that we see is payroll, and for the owners, often are not including themselves in that payroll cost.
Yeah, guilty.
Guilty. That's a spot where, like, you may stack up okay with your payroll percentage of revenue without including yourself, but once you add yourself in as the owner and what you're doing in the business and what you're taking for, either draw distributions or an actual salary, your business wouldn't make sense or isn't going to be profitable once you factor that in. So we've had multiple cases. I think we see this kind of frequently where, okay, we look at that analysis, we say, okay, factor yourself into payroll, and does this payroll percentage still make sense? And oftentimes it's no. So that means a few things. It's like, is there enough revenue being generated to support the staff you have? And there's there's a misalignment there, right? Like, there's either your overcapacity for the volume of service you're providing, or I mean that's usually the case there. So
what's most common? They have too few clients, or they're charging too little. What's more common?
I think it's often their overcapacity, so too few clients for the number of providers or available slots they have.
Got it.
That's often what we see. So it's like they've hired a little bit ahead of what the demand is, and then payroll cost isn't quite in line with the revenue they need to be bringing in.
Yeah.
So which is, it's good to be ahead with that, but you don't want to be too far ahead where you can't support that payroll cost, right?
Got it. So
So
do you advocate for clinics front loading those costs where it's like, okay, great, we want to scale, so we're going to hire somebody and start filling up their books, but we might go backwards a month or two while we're doing that.
Yeah, yes, to an extent. So oftentimes we say like 75 to 80% capacity is the
Hmm.
sign to start to hire or look to
Yeah.
hire. Um, if you're at that point, like soon you're going to be over capacity and people are going to be stretched too thin, or you're going to have to book people too far in advance where you don't want to be going out that far, and it's time to bring somebody else in. So that's sort of the key tipping point.
What's
Um,
the uh what's the average like capacity per full timer that the clinics are sitting at that you're like, oh my gosh, everyone's sitting at 20%. That's why you're not profitable.
Yeah, I mean we've seen that for sure. I mean, I think there was one I was looking at recently where they were sitting around like 40% overall capacity, and it's like that's the problem here is why the bottom line is what it is because there's not enough revenue coming in, there's not enough patients coming in the door right now to keep everyone busy and support that payroll cost.
What do you tell them
Um,
to do when that happens? Do you then just say you got to do more marketing, or are you also just assessing like, look, are you re-engaging with your current patients? Are you getting back to leads that you're already getting? It's tough at that point because then they have to analyze like, okay, why are our books not full?
Totally, yeah. I mean, exactly those things. We look at, rebookings, patient engagement. Are they doing what they can with their existing patient base and getting them in on a regular basis? That's step one. And then what are the goals too, really? Is it to continue to grow? And if it is the case, like then you want to fill that capacity that you have. And then, right, more marketing, more efforts that are going to drive new business to the spa would be the goal there to focus on to continue to grow and hit those revenue marks. If
Yeah.
that's not the goal, if it's to kind of keep status quo, then it's
Yeah.
like you're overstaffed and you need to make
Right.
a cut somewhere, right?
What
So
what kind of a payroll percentage is healthy for the average clinic?
we generally would say like between 25 to 35% is a typical range. Ideally,
Hmm.
like 25 to 30 is really where you want to sit. And remember, that's including the owner. So you got to factor that
Yes, that's what I was gonna say. And what I was gonna say is once if the owner is not factored in, maybe somebody's sitting at 35%, and then the owner gets factored in, all of a sudden it's up to 40, 41, or
in.
something like that, and you're like, whoops.
Right. Exactly. Yeah. So that's where you don't want to be. If the owner's not I mean, I would say factor in the owner one way or another. Even if you're taking distribution, just add that in when you're running that, trying to figure that percentage,
Yeah.
so you can get a real picture of that cost.
How are clinics doing with measuring their COGS too? Are they measuring that really well? Are they taking in the fact that they're getting rebates from these companies? Like how are they like are clinics even tracking that stuff without somebody that's a professional?
Uh,
COGS stands for cost of goods for anybody that is listening. Sorry, go ahead. That's the
right.
things that you purchase for your business, your cost of your goods that you sell. Sorry, go ahead.
Yeah, we are with our clients. We track that very closely because that's obviously the second
Huge.
biggest cost other than payroll. So that's where we definitely spend a lot of focus there and make sure that gross profit margin is at an appropriate level. So same thing there. We're looking at those COGS as a percent of sales and making sure that's in alignment.
Yeah.
So we want to see gross profit margin ideally, 70% or better. For smaller med spas, it's hard to hit that realistically just because of, you need the volume in a lot of cases to get there.
Yeah.
But that's where we're sort of like that's the benchmark where you want to be sitting. Um, and yeah, it's important to track. Like that's a huge cost, and it's like you see we another area we've seen a lot of pitfalls from a cash flow standpoint is folks buying inventory in large quantities when they don't necessarily need it,
Right.
just to get discounts, and then it creates this big cash flow drain, right? And it's like
Hmm.
now you're putting that on credit cards and you're paying credit card interest rates to get a 5% discount or 10% discount,
Listen up, you stinker reps that are pressuring these people into doing this. You stinkers. You stop it. You're gonna get President's Club. I promise. You're gonna be fine. You don't have to pressure these little guys into overbuying. Okay. Sorry, the little soapbox to my little reppies. Stop
Go
it.
get him, Jerry.
Stop
Go get him.
it. Take care of these people, or they'll never take care of you. Sorry. Go ahead.
Yeah, no, I mean that's
Kills me.
exactly it. Like
I love
you got to
it.
be smart about the cash flow, especially for the smaller med spas. Like cash flows the lifeblood of your business. So you got to make sure you're not overextending yourself, and putting yourself in a bad situation that you can avoid, so.
Yeah. Where do you want their COGS to be percentage wise? So we're talking about payroll being 25 to 35. Where do you want COGS to be?
Ideally around 30%.
30%?
Yeah, or better. I mean, it depends on your service mix. If you're injectables heavy, like it's going to be maybe a little bit higher than that or in that range. If you have a variety of health and wellness services, it can be a little bit better too. So
yeah. Now, when a clinic has got profit, which is awesome, they're in the green, they've got cash left over, they're paying themselves, they're part of payroll, their COGS are in place, they're crushing, they're getting 30% profit margin every single month out of this thing. Where should they be squirreling that money away? Should they just be setting it into a bank account, or do they need to have a nice financial management system where they're putting that into other scenarios? Should they be reinvesting it into new staff and growth? What do they do with the profit? The real profit.
Right. The real profit is where you want to be, right? So from, as the CPA, I would first say set aside some of that profit for taxes.
Boring.
I know, boring. But it's important because it hurts if you don't. So
that's true. Jail's worse. Yeah, jail's worse.
Jail is worse,
isn't it?
And
That's right.
Paying a monster tax bill in April is also worse. So we would say set a portion of it aside for taxes, do tax planning. Do the boring stuff because it's going to make the profit more enjoyable in the long run if you're taking care of the tax component. So step one is set the money aside, pay your quarterly taxes. Step two is really dependent on what your goals are. I mean, if you can take that money out of the business and invest it elsewhere, work with a financial advisor to put that money to work for you. Reinvest in the business. If you're seeing growth, you have opportunity to continue to grow. Obviously this is a dynamic industry and there's a lot of growth happening. So if you can take advantage of that, you have the demand is there for you in your market, continue to leverage that and continue to grow. So there's a lot of opportunities there. It's really, what are your goals? Where do you see where you want to go? I mean, a lot of folks are trying to open multiple clinics and go that route too. So there's opportunities to do that, of course.
Are there any interesting tax loopholes or not loop? I think there's no such thing as a tax loophole. It's just taxes and the tax code. Are there any interesting tax advantages that clinicians should be considering right now that they're like, oh, did you know that there's a special thing going on this year with GLP-1s or neurotoxins or something, and you're getting a crazy whatever. Is there any interesting tax considerations that the audience might not know about that they should be maybe thinking through now as they prep for 2026?
Yeah, I mean, I think the biggest lever that's folks can pull is depreciation deductions for equipment. If you're buying new equipment, you can take 100% depreciation on that in the year you buy it. That was just re-extended in the bill that passed this summer. So that's still in place, which is great. I wouldn't recommend necessarily buying equipment just for the sake of the tax deduction.
Yes, I agree.
But if you are in need of purchasing equipment, like it's a great way to mitigate your tax or defer that tax bill. So that's one opportunity there. Another one is maximizing your retirement accounts. That's an easy one.
Oh, yeah.
And it's double benefit there because you're getting a deduction for at least a portion of that, and then you're also putting away money potentially tax free. So that's great. And, obviously all the business expenses are deductible. That's the biggest thing there. We see a lot of folks, trying to do home office or auto deductions. In this industry, it's tough to justify those in a lot of cases, just because the way the tax rules are, just because people say, hey, buy a car, you can write it all off. Like it has to be used for business, and commuting to and from does not count as business use. So that's one common thing where, it's people try and do it, and it's not necessarily up to IRS code to do so.
I see. So that's why my friend tried to give me Disport on his boat the other day, huh? He was trying to justify, and then he billed me for it. Yeah, he's trying to justify that as a business office. He goes, "No, it's my office. My boat's my office." Oh, yeah, interesting. Now, answer me this. Okay, speaking of depreciating assets and lasers, Let me just start. I love my laser companies. I love my laser companies. I love what lasers do. I love when we are buying them out of an abundance of desire to serve people and help. I'm not a fan of when we buy them on promises that these lasers are going to magically build your business. Do you see? I know, and don't hear what I'm not saying. I think lasers are great things, and you should have them if you are buying them in order to serve your people. If you are buying them or being pressured to buy them because it's going to save your business, I typically disagree. Are you seeing a profit margin wise? Are you seeing a significantly higher performance in clinics that have bigger devices, that have a little bit of a lower cost of operation versus clinics that are mostly just injectables and reusables?
I don't think you can say that across the board necessarily. I mean, I think I agree with what you're saying in this regard is like buying the laser itself and having that additional service offering is
Cool.
yes, can be great.
Right.
But like you have to fill, you got to bring the patients in to
Right.
utilize that device. And that's the big thing. Like if buying that means, yes, we're getting an influx of new patients or can it, offer additional services to existing patients, then totally, by all means, like, yeah, those projections the laser reps are going to show you on the ROI will come to fruition. But if you're not bringing those patients in the door and utilizing the device, then it's an expensive investment. It's an investment, like it's debt you're most likely taking on to buy that equipment. So you got to make sure the cash flow is there to support that, or will be there to support that.
Yeah.
And I think there's ways. This is your expertise, not necessarily mine, but I think there's ways to approach that before making that purchase. Of
Oh my gosh, Julie Davis! I will sing this till I die. Julie Davis up in Tallahassee, Jacksonville, up in northern Florida.
Mhm.
She tells this story. She did this with Podium. She was considering buying. Let's just. I don't remember the devices, but I'm just going to say she was considering buying a Morpheus 8 or a Cyton Jewel. And she was considering each one and didn't know which one she wanted to go with. So she sent a mass text out to her current audience and said, we're considering buying an RF microneedling device, and it primarily does skin tightening and this and that and blah, 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 blah. We're also considering buying a laser and energy-based device, and it primarily does skin rejuvenation and resurfacing and blah, 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 and this. Which one would you prefer? And then her whole entire existing audience voted. Then, based on the one that had the most votes, she bought it, and then she sent out a deal to everyone who voted for it. Hey, for you voting for it, you're going to get 20% off your very first service. And she packed that thing out within a month of like it was like paid off in months
Yeah,
after her buying it because she just filled her
yeah,
pipeline
that's awesome.
proactively. Yeah, slick, very slick.
Totally
But most people are buying devices, not most, a lot are buying devices thinking it's going to save their business.
agreed.
And
Yeah,
I always respect the Cyton reps because they will deny you. They are not going to sell you a device. They will say, no, 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 you got to build your business first, and then we'd love to sell you a device. You're just not in a position to use it right now, which I think is awesome. It's so honorable.
yeah, that's great.
Um, okay. Now, we've talked a lot about like the actual functions of how people should run it. How should they be looking at their money? What's the kind of the mindset people should be having with their money as it's coming in and as they're spending it within their business? How can they shift their mindsets in this conversation so that they can have a healthier approach to their finances?
Yeah, great question. I think you have to step back and look at the business as a CEO, right? You're again sort of trying to build the momentum. So looking at it not from, a standpoint of, a survival standpoint, but how can I continue to build and succeed and grow the business? So it's definitely a tricky mindset because a lot of people do have, you know, negative connotations when it comes to looking at their finances or money or whatever it may be, looking at your bank account. So it's looking at it objectively, looking at it from the mind of a CEO. Try and put yourself in that position because that's who you are as your business owner, right? In most scenarios. So it's really a framing it in that way where you can use those numbers as a tool. This is the information you have. This is how you're measuring your performance and how now what can I do to use that information to make the next move that's going to build momentum, right?
I can't stand looking at my books if we are not growing by 10, 20, 30% on any given month. Anytime I look at my books when I'm doing that, I'm always like, oh my God, we suck. Oh my gosh. And then I'm just like, I don't want to look at it. Or maybe it's a big month where we're making a huge investment. We're buying a lot of sponsorship spots somewhere or something like that. And I'm like, oh my gosh, I know we're just going to go backwards. I know it. I just know it. That anxiety for me as a business owner, holy smokes. I can imagine the volume of expenses that clinics have to deal with is so, and everyone wants a freaking piece of the pie. And it oftentimes, and there's a way to, there's a way to run a clinic so that it's hyper profitable and you're making millions and it's awesome. But oftentimes people think, oh yeah, they're making tons. Employees think they're making tons. It is not always the case, especially in a growing clinic where everyone's trying to get a piece of that pie, unfortunately. And the clinic owner should be keeping their pie. They earned it. They earned it.
They took the risk, right, to do it.
Yes, they earned it.
Yeah, and I think a good way to think about that too is to look at what are the key drivers. Like to meet your budget, to hit the profitability numbers, you maybe need to be hitting a certain revenue number for the year, right? And then if you break that down, you can figure out what it needs to be by month, and then you can figure out what it is each week. So you have this number in mind of like, this is my weekly target. And I know sometimes I'll hit it, sometimes I'm not, but this is my goal each week. And if I can hit this each week, I know things are going to work out. Like everything else is going to sort of take care of itself in a lot of ways. If your expenses are in line with the industry standards, like where they should be, your payroll's in line, your COGS are in where they should be, your other expenses are manageable. Like that's sort of a great way to like simplify and focus on some of the key numbers. That's one easy way to just look at top line revenue. Like this is, step one, let's make sure we're hitting this target. And then obviously you can look at provider level metrics and a little more detailed things, but, first step, take baby steps, make sure you have that, initial component in line.
Yeah, that is awesome. That is awesome. Well, I know that I could talk to you guys about this for hours, and I had more things I wanted to talk to you about: tax planning, the value of your time, making sure that you're paying yourself, talking about personal versus business. But unfortunately, I have a meeting right after this, and can't. This has been so good. Now,
it's been awesome.
Listen, everybody that's out there in the audience, I know we talked a lot about how can you DIY this thing, and if you're in a position where you have to DIY it, I get it. Obviously go for it, and hopefully this advice can get you there. However, you are the momentum driver of your business. It is your job to build speed in your clinic, and overstressing about finances when you could be delegating it is something that is hampering your ability to create speed. So guys like this, at least at bare minimum, calling about bookkeeping and just saying, please just help me keep my books clean every single month so I don't have to stress about it, is an absolute weight off your shoulders. Me getting bookkeeping taken care of was like one of the most dramatic peace of mind that I got for my business. So my friends over at Liguori, what's the best way for people to kind of get in touch with you guys? Do you have resources that they can continue getting from you? You're such a depth of knowledge. I'd love for them to be able to continue to pull from you.
Absolutely. The easiest way to find us is just Googling us, search our website. We're also on Instagram. You can find us on LinkedIn, any sort of social media platform. Just not TikTok. I haven't put out any TikTok dance moves.
Oh, TikTok would do great for you guys. Yeah, I would think TikTok would do very well for you.
The dancing accountant.
Yeah.
So that would be the best way. Is the website. You can submit forms. Obviously, our email to reach out to us will be there too. So there are numerous ways to get a hold of us and find resources on our website as well. KPI spreadsheet, which will help you kind of evaluate at a basic level some of the things that Nick was talking about in terms of making sure
awesome.
P&L is in a healthy.
It's like a KPI benchmarking sheet where they can know where they should be.
Yeah,
right.
Generally
they
within the
plug their numbers in, and that'll compare it to the industry.
That's free.
So
yeah.
Yep.
Oh, if you are listening to this podcast, go onto their website right now. Either if there's a form or whatever, but ask them for that. Literally going to compare you against the industry and let you know exactly if your numbers are working for you or working against you. That's That is rad. At baseline, it's like going in for a free doctor's checkup for them to say, yes, your finances are good, or no, finances are not where they need to be. That's awesome. That's awesome. If you are listening right now, you better freaking get on there. If you already know the number, whatever. If you already know how good you're doing, that's awesome. But if not, get on Liguori. What is it? LiguoriFinancial.com?
LiguoriCPA.com.
LiguoriCPA.com. Get on there.
Mm-hmm.
Well, thank you guys so much for your time. Very grateful. I'll see you next week at Aesthetic Next.
Yes.
This is probably going to be put out after Aesthetic
Let's
Next.
do some karaoke, Jared.
You want to? I've
saw
only
you
done
doing
karaoke.
I love singing. So
you saw me at the that's right. That's right. Last week I did karaoke, didn't I? I've only done it twice now. It's my second time ever.
Really? Okay.
First time was with Kate Kaler, from Galderma, is a massive karaoke advocate, and she was like, "Come on, Joe." We were all in Vegas. It was me, her, Keon Creamy, and a handful of other people, Steven Soar, and Melinda Bentz. And we all did karaoke at like one of those cool little bars in Vegas. That was the only time I've ever done it, and then last weekend with Yvonne. So I'm down, dude. I would love to do. I've got the bug. I get it now. I understand now.
Good. Yeah, let's do it.
Cool, guys. Well, thank you for your time. I'll see you next week in Dallas. This will probably be put out after Dallas. So if you guys are seeing it before, then that's awesome. But likely this will be after Aesthetic Next. Where will you be at Aesthetic Next in the event that we put this out in the next few days? Booth what?
Booth 136.
136.
So kiosk around the edge of the conference gathering.
If you're walking in, are they turning left? Are they turning right and heading to you? Where's 136?
Take a right. And keep going. Got it. See us eventually.
I think we're at 306. We're like, if you take a left, we're like the second row right at the beginning. We have a little a booth there as well. So come find us while you guys are around. Awesome, gentlemen. Well, thank you for your time. This has been super enlightening. I think everyone at home is going to get a whole lot out of it. And thank you so much for listening to The Patient Magnet. If you have any questions or comments, please put them down below. Don't forget to subscribe. It helps us a ton, whether it's with YouTube's algorithm or Spotify's algorithm. Just support us by hitting that subscribe button. And if you disagree with anything we said today, or you think you've got a hot take about finances, put it down there. We would love to fight you in the comments. Please do. And that's it. We'll see you guys next time. Thank you for joining us again for The Patient Magnet. Thanks, gentlemen.